Hey everyone and welcome back to Money Journey. In today's video we are diving deep into a true giant of the semiconductor industry, ASML. This Dutch company is absolutely critical to the global tech supply chain, enabling the production of the most advanced computer chips in the world. ASML stock has seen some volatility recently, prompting the big question: is ASML a buy as we head into 2025? We will analyze their business, recent performance, and future prospects to help you decide if ASML deserves a spot in your investment portfolio. Let's get started. ASML operates in a highly specialized niche, EUV lithography. Essentially, they build incredible, complex, and expensive machines that use extreme ultraviolet light to print the intricate circuits on silicon wafers. Think of it as the ultimate high-tech printing press for chip manufacturers like TSMC, Samsung, and Intel. What makes ASML so dominant? First, their technology is incredibly advanced and difficult to replicate, creating a massive barrier to entry. Second, they have a deep, long-standing relationship with key customers, making them an indispensable partner. And finally, the relentless demand for more powerful and energy-efficient chips fuels consistent demand for ASML's cutting-edge lithography system. This near monopoly in EUV lithography is their key competitive advantage. During the last few years, ASML stock had some ups and downs. During last year, the stock is down almost 23%, but if you look to a 5-year graph, for example, the stock is up around 41%, beating the S&P 500. Performance-wise, ASML has been one great stock and great company, beating the S&P 500, but it comes with a lot of volatility because the semiconductor industry is a lot cyclical, and sometimes with AI hype, there is a lot of optimism in the stock, and with high expectations, sometimes there are pessimism as well. So that is the reason why there is so much volatility in a stock like ASML. Looking to their fundamentals, I have to admit ASML is one of my favorite companies, one of few European companies that I want to invest in. I really like their business model, their technology, which is incredible. It's a $290 billion company market cap, trading at a P of 35 and a forward P under 25. 25 forward P is a little bit higher. I prefer to invest in companies with a lower P, but there are not much companies like ASML with a wide moat. When you look to margins and growth, they have been growing around 19% per year, which is incredible. Gross margins of 51%, net margins of 27% last year, which were down from if you compare to the mean. For example, they have been having margins like 28%, 31 some years. Right now their balance sheet is incredible as well. They have $12.7 billion in cash and short-term investment, and their long-term is just under $4 billion, so they are net positive in their debt. Returns, that's my favorite part. Last year's return on equity 48%, return on invested capital 35%, but if you look to previous years, they had return on invested around 40-50%. This last year was a bad year. They just grew their revenues around 2.6%, so profitability take a hit. But with growth expected from the next years, I'm expecting their returns on investment and their margin to grow. So that's a really good sign in my opinion. When you check our Money Journey checklist, it's all check marks. Revenue growth, a check, growing almost 20% per year. Margins are really good, 51% gross margin. For a company that sell equipment, this is really high margin. Bear in mind, they are not selling technology, even though their machines have a lot of technology, but they're selling a machine. And with that, look into these margins, there are incredible margins. Below that, their balance sheet is incredible for an industrial company, especially for a company that produces, manufactures equipment, machines. So awesome for a company like ASML. You have to bear that in mind. Returns on equity and on investment really high. There are not much companies with these high returns. In terms of moat, for me, their principal moat and competitive advantage is their proprietary technology. There are no other company with that technology that can mimic, even if you give all the recurses or all the money to another company, they will be 5-10 years behind. So that's really difficult, and we have to buy this machine from ASML, otherwise we have no other options. So it's a wide mode company. They have been free cash flow positive, very profitable, and they are returning capital to the shareholders, but not much. They have been doing buybacks around 1% per year. Sometimes 2021 and 2022, which were years that the stock was down, they had like 2% or 3% buybacks, which means that management are doing an incredible job buying back when the company is cheap. And last year they didn't do much buybacks because valuation were really high for ASML. So this is a really good management team in my opinion, and they are doing the best. They are paying a dividend around 1%, so they are using their cash to invest in the company and they are doing a very good job. Their growth has been incredible. So as a shareholder, I'm not a shareholder, bear in mind, but if I was a shareholder in ASML, I would prefer them to invest in their business for growth, for future growth, than to be paying a dividend. And buybacks at this valuation, it not might be the best thing to do, but we'll talk that next in our discounted cash flow analysis. So with that, fundamental score of 94 out of 100, which is very good, one of the best companies I have in my watch list. You just have to look at this graph. Net income and revenue trend upwards, which is incredible. Look at this graph, very good. Gross margin increasing, returns on investment increasing as well if you compare to previous years. This year it took a hit, but it was because growth was not as good as expected. Shares outstanding going down, net income per share going up. This is a really great company when you analyze. So, but what is the price to pay for ASML? It is worth the price of that is trading right now. In my discounted cash flow, bear in mind, I really love this company. I do really believe this is a high quality company with an incredible wide moat that will be leaders in the next 10 years. So for me, since it's a Dutch company, for me the risk to invest in ASML it's pretty low. So my discount rate for my fair value will be around 10.5, which is lower than other companies I do research. And for my base case, so what I think ASML can do, I do believe they can have net margin around 30%. Bear in mind, there are some years they have that. Free cash flow margin last year were above that, so I think for my base case it's good margins. Growth, they are expecting to grow 15% this year, 2025, and 12% in 2026. So for the next 5 years, the third, fourth, and 5 year, I'm expecting them to grow around 12%. With this AI, will be plenty of demand for their chips. Not only with AI, but overall, the world will need more chips in the future. That's because tech is growing a lot. So I'm expecting them to be one of the biggest beneficiaries, both in AI and technology. And for the rest, 8% growth. In terms of PE, I do really believe they deserve a IP, a premium. So maybe I'm being a little bit biased. I don't usually assume IPs, but for this company I'm assuming a 24 PE. If you assume a 20, it will be okay. If you assume a 25, I will not believe, or it is always difficult to assume the best P, but I do really like this company. I would like to invest in this company, so this is the P I want. But if you think that ASML deserves a lower P, it's okay. It's on you. I would prefer to assume a lower P. Actually, lower P, more margin of safety will have, but I think we have some margin of safety in the margins and in the discount rate assumed, but bear in mind ASML is one of the best companies in the world, one of the most critical, important companies in the world, so of course it will have to deserve a big premium. Then I have my bull case and bear case, and I came with an intrinsic value of $622. Right now the stock is trading at 737. The stock has been up and down. Recently I remember seeing the stock around $660. I was looking into it. I would prefer to buy the company around $600. I think it's my price. I don't own it, but between 600 and 650, I think it will be a great price to start a position. But of course this is not a company that is very cheap. The question is, will you be able to buy ASML at a big discount? For me, my intrinsic value would be around $600. I might get interested in starting a position at that time. For now, I'll be waiting for a better opportunity. So, is ASML a buy for 2025? The company's fundamentals remain exceptionally strong. They are leaders in a critical and growing market with significant competitive advantage. While cyclicality in the semiconductor industry and global economic uncertainties are valid concerns, ASML's long-term growth prospects are compelling. For investors seeking exposure to the high-growth semiconductor sector, ASML presents a unique opportunity. However, like any stocks, it's not without risk, and thorough research is essential before making any investment decisions. Let me know in the comments what you think about ASML. Thanks for watching, and I will see you in the next video. This video is for informational purpose only and should not be considered financial advice. Always conduct your own research and consult with a qualified financial advice before making any investment decision.